Hello and welcome to another geopolitical analysis video. Please like, subscribe, and share this video posted below. We will venture into the global markets and commodities and examine how fast they're moving in these turbulent times. Now, the US dependency on oil has reached a new high of 9.2 million barrels a day in consumption, also creating a larger dependency of Mexico in South America. Something that was very interesting that happened was that the Biden administration lashed out in the big oil companies in the US with an angry letter trying to persuade them and berate them for not increasing their refinery output. Now, this is laughable. It's comical because the humor in this is so ironic because years ago, when the Biden administration took over, we saw there was a huge push in the green energy sector and that new technologies were pushed for the oil industry to adapt into. We saw that the portfolios of some of these large, big oil producers had actually jumped into green energy, incorporating solar, wind turbines, and even geothermal. But now we're noticing that not only is that something that cannot reach the output, the energy output of oil, but also we're noticing that that's having a direct effect in the prices as the refineries are not able to meet the demand. And that is why the prices are going over. It's not because of Putin. It's not because of any other geopolitical circumstance. It's because of the energy sector that has been lacking in terms of its output to meet the demand. Now, in this angry letter, we have to be very careful because although Biden singled out ExxonMobil and accused them of profiteering and not revealing their true profits and withholding their investments into new drilling, there's also been a slew of threats of the windfall tax, of increasing more taxes, of pricing cap, which has never worked before. And as we examined in the previous video of NOPEC, we know that this will actually have an opposite effect in the markets. Now, something really interesting to see across is the French major Total, which we saw that it doubled down in its investment in Angola, investing 850 million into the third phase of drilling in the Clove complex. Since 2014, they've been there, and things got a little bit complicated with the development, but now we're seeing that Total is not going anywhere. And a lot of these companies are finding new areas to drill and are increasing their investment because we all know that inflation is not going anywhere. And of course, we had the rate hike that happened yesterday, and as Powell promised, more to come. So the Western world will be following that model of increasing interest rates in hope to bring down the inflation. But just like we examined previously, that's not going to happen. Now, another mining company, BHP, in Canada, has actually reoriented their focus into fertilizers as opposed to mining, which is very interesting because a lot of these commodities that have been going up in price are a huge attraction and luring a lot of investments. So that's something really to consider. Of course, Shell, the UK major energy company, has received 2 more offers for its offshore oil and gas fields in Nigeria. Very interesting again, as many companies withdrew from Nigeria because of a lot of the shenanigans that were going on there with increasing violence, gangs, and stealing oil. But again, we're noticing that the Niger oil delta has much to offer. So no surprise here. We know that OPEC Plus released a statement that indicated the fail of meeting the metrics of their output. Once again, they haven't delivered what they promised. And this is no surprise because if that happens, the price will drop and their profits will decrease. So of course the Chinese demand has really dropped after the recent COVID lockdowns, and of course the supply chain has gone through major backlogs in the Southeast Asia ports. But of course Libya, as we've mentioned before, has had large problems with this production. Civil war going on, lots of troops gathering, so that can be good. We're Instead of seeing 1.2 million barrel production a day, it's gone down to the low 100,000 digits. Now, of course, OPEC is revisiting its growth, but we're noticing that there's a bearish sentiment when it comes to the output production. BP, for instance, has shed a lot of its oil sands and has doubled down on Canadian offshore drilling, which is very good because there are a lot of companies that are coming together and they are doubling down in their investments in some of the new developments, as smaller companies like Sevenis in Canada are showing signs of not only recovering but of actually increasing their percentage in the development in Canada in the Bay du Nord. On another note, it's very interesting to watch the Iranian-Venezuelan 20-year agreement deal. Now, something that we examined in previous videos, the US approached both companies and of course asked to increase their output in order to bring down the sanctions, which is a bit laughable because both were labeled as dictatorships and autocratic establishments. However, this cooperation calls for bringing both countries closer and being able to bring the Iranian companies to repair the El Palito Venezuelan refinery to increase its output, and of course to build new oil tankers. Now this will definitely ease the internal pressures of both countries that are suffering from hyperinflation and also from a lot of civil uprising. It's incredible to think that these two countries are uniting in order to bring progress and development when the US had recently slapped multiple sanctions and also threatened them to war. Now this area is definitely needs a lot of work in order to see some progress, but it is definitely a step, however, an ironic one. Finally, don't fall for the propaganda that the US is spewing in the media, that it's all Putin or the Zelensky war is fault for the gas prices. It is the American energy policy that has led to this. It is the European energy policy that has led to this, where we're finding in the West a lot of industries are shutting down the production lines because of the price of commodities, which again we discussed in our previous video, how in the East they're increasing their production of commodities, and in the West we are just becoming consumers by not building new refineries, closing some, and of course just printing money out of our way of debt. On our next video, we'd like to examine the big oil companies' response to the Biden's letter and their recommendations to ease prices. Thanks so much for watching. Exciting times. Please like, subscribe, and share this video. Thank you. Bye for now.